What's up investors and welcome back to the channel. Today I want to share with you an OTC penny stock to buy now. This penny stock has several upcoming catalysts and one major catalyst that will see this go parabolic within the next few weeks, making this telecommunications company one of the best penny stocks to buy in 2022. This stock is currently trading at less than half of its 52-week high and just a few percent above its 6-month low. There is an incredible opportunity here now with this penny stock's market cap dropping below the company's projected 2022 revenue forecast. So stick around and let me explain to you what I think of this company. I think you're going to like what I've got to say. So today we will be looking at what exactly IQST do and their huge potential market. We will look at the very latest news and the recent audited financial report released this week. I will look at some technical analysis to further highlight the scale of the opportunity that exists here, but I will also discuss any negatives about the company before I give you my conclusion on IQST stock. Before we get into the video, if you like the content, can I ask you to smash the like button? It literally costs you nothing, but it helps me out so much. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. Again, this is 100% free and another great way to show your support for the channel. If you agree or disagree with anything I say in this video, drop a comment and let me know. I really want to hear your thoughts about this penny stock, especially with the catalysts over the coming few weeks. I want to point out that I'm not a financial advisor and this is not financial advice. Now let's get into it. IQST is a technology company offering leading-edge telecommunication and technology services for global markets. This company is traded on the OTCQX, ticker IQST. The company is a fully reporting penny stock with corporate governance, an independent board of directors, and an audit committee. IQST offer leading-edge services in both business-to-business and business-to-customers divisions across 5 separate business divisions. These include the blockchain division, the technology division, fintech, EV, and the telecom division, which is the largest of these, being made up of Swisslink, Italex, Q Global, SMS Directus, all coming in under the IQS Telecom brand. This is a global company and has presence in 15 countries, and its products and services are used in several industries, and through its subsidiaries, IQST is interconnected with some of the world's largest telecommunication companies such as Vodafone, Verizon, Orange, and IBM. During 2021, IQST became a debt-free company and now has no convertible notes, warrants, or settlement agreements on its balance sheet. The business strategy is to develop their business with high margin and EBITDA contributions in areas across their business divisions, and this approach will make IQST one of the leaders as a one-stop shop for high-tech services. This has been another big week for IQST with lots of news. But has it actually been a good week for this penny stock? Today, the company's CEO published a shareholder update addressing the latest developments on the company's progress towards its net income positive of $90 million for 2022's revenue forecast and NASDAQ uplisting. Remember that this is a penny stock that will be listed on NASDAQ in the coming months, and there is huge upside potential here. They published their 2021 annual report and closed a significant profitable acquisition. The audited annual results posted earlier this week verify year-over-year 44% revenue growth to $64.7 million and a 59% increase in gross profit that shows the improvement on the commercial perspective. Now I will look at these financials in just a few minutes to see just how good this actually is. Remember that this is the first audited financial statements, so the auditors need to sign off on the results too. CEO Leandro Iglesias says, I am more optimistic than ever that the IQST share price will organically reach the required minimum NASDAQ listing price. I feel IQST's share price is like a wound-up spring, waiting for the overarching market uncertainty resulting from inflation concerns and the Ukraine war to clear and unleash our wound-up potential. While our net income is constantly improving, the company has not yet achieved a net income positive result. The loss is getting smaller. Our consolidated net loss for 2021 was 42% less than our loss in 2020. And if you check all the financial trends, all of these are positive, and I will look at this in just a couple of minutes so you can clearly see the progress that is being made. Whether or not this is enough to be seen as positively as they're saying is another matter, and we'll take a look at that too. IQST's revenue growth has been fueled by the rapid expansion of the telecommunication services. Now, with a broad base of telecommunication customers, we are well into a strategy of introducing new, higher margin products by cross-selling into our existing customer base. First of all, this is a huge market to be expanding into. The global telecom services market size was valued at $1.65 trillion in 2020 and is expected to expand at a compound annual growth rate of 5.4% from 2021 to 2028. And increasing numbers of subscribers, soaring demand for high-speed data connectivity and services are the other potential factors fueling the market growth, which could make this one of the best penny stocks to buy in 2022. As it says here, we expect to reach net income positive this year, and we expect our margins to continue to improve after this year. Today our company is better than yesterday, better than last week, better than last month, and better than last year. We are working every single day to improve the business value for our company. Now this follows on from yesterday's announcement of the acquisition of SmartBiz Telecom, a profitable US and Latin American telecom operator expected to boost IQST's bottom line. SmartBiz gives IQST access into the US market, bringing with it its existing US voice termination, sales infrastructure, and experience within the US market. The integration of SmartBiz Telecom's operations into IQST will benefit from the long-term relationship that already exists between the CEOs of each of these companies. Now, let's get a few facts straight out there. This is not a major acquisition in terms of numbers. SmartBiz has only $500,000 net income forecast for 2022, but this did not cost too much either. IQST purchased a 51% stake in this company for only $800,000 in cash and $1 million in restricted shares in 6 months. Now, just to be clear, if this penny stock can organically grow its share price up to the Nasdaq minimum requirements, then this $1 million of shares could mean as little as 250,000 share dilution. So I think that this is a very clever agreement. And let's remember that its current Nasdaq uplist objective is targeted to be achieved within the first 6 months of 2022. So that should be within the next 10 weeks. Even for a trader looking for short-term gains, this stock looks to be a penny stock to buy right now. But is it really as good as it seems? Let's look at the audited earnings report released this week. Guys, if you appreciate this type of analysis, then please smash the like button, and if you're new, subscribe to the channel. At the moment, about 75% of my viewers are still unsubscribed. It costs you nothing to like and subscribe. You are literally helping the channel for free. First of all, IQST's revenue increased 44% year over year to $64.7 million, and the gross profit increased 59%. And we can see here in this summary table that there was a 7% reduction in operating loss and a 42% reduction in consolidated net losses, whereas assets are up 52% and liabilities are down 68%, largely boosted by a 343% increase in cash, which means there is an overall 368% increase in stockholder equity. And we can see very clearly the progress over the few years when we look at the revenue chart from 2017 up until now. And also looking at the consolidated net loss is Q1 2020 and the massive difference in the balance sheet, with overall equity going from 6 million negative up to 6 million positive from Q1 2020 up to Q4 2021. There's a link to this presentation in the description down below, so check that out. Looking at the income statement, we can see the massive growth in revenue from $44.9 million up to $64.7 million. However, the company is still operating at a loss, and there is an overall net loss of $3.8 million. But there is a huge reduction from last year's $6.5 million loss, and the company is of the belief that they will turn profitable in the near term. But a company should not be judged on its profit and loss for a 12-month period, and instead the balance sheet gives a better view of where a company really is. Now, if you follow my channel, I always tend to look at a company's balance sheet at a minimum. And this is one of the better balance sheets in the OTC. We can see here that they have total assets of $9 million and total liabilities of $2.6 million, giving this penny stock an asset to liability ratio of greater than 3:1, which is fantastic to see. And the assets is largely made up of cash, while there is no toxic debt in the liabilities. But overall, this is a very strong balance sheet, and these accounts are audited, which adds an extra layer of certainty to the numbers. Guys, I always try to make you aware of the negatives as well as the positives with every company. So when we look at the notes, there is a note on going concern. Now this is a standard note, but the wording differs from company to company. So the ability of the company to continue as a going concern is dependent upon its ability to successfully accomplish its business plan and eventually attain profitable operations. So it's good to see here that it is dependent upon its ability to accomplish its business plan. Rather than with a lot of OTC stocks, you will see that it's dependent on its ability to raise funds through equity offerings. So the overall plan appears to be a successful business plan rather than diluting shareholders. However, they have said here that the company may experience a cash shortfall and be required to raise additional cash. But this is pretty standard, and you will see this in the accounts of any company that has made consecutive losses, as IQST has done. And of course, with these being audited accounts, the auditor has picked up on this and noted it as a critical audit matter. And the auditors have noted that management intends to continue to fund its business by way of public or private offerings of the company's stock or through loans from private investors. So equity offerings cannot be ruled out here, but I don't think that there is any immediate need for this for a number of reasons. The first of these is when we look at the cash flow statement. They burned through 3.1 million in 2021, but they currently have 3.3 million in cash and 2.5 million in accounts receivable. So the company is financially sound right now. Another reason, of course, to not dilute shareholders right now is that they are planning to reach a NASDAQ minimum price in order to uplist, and they plan on doing this organically. So any dilution of shareholders would make that near impossible. Now, moving on to the charts. When we look at IQST's price action over the past 6 months, we can see here, when I made a video in November, the stock was about 45 or 46 cents, but it ran up to over $1 in less than 6 weeks. The same thing when I made my video in February. After dropping down to 45 cents, it ran to over 75 cents in March. Right now, this penny stock is trading close to its lowest price in over 6 months at only 50 cents. I'm expecting this to see a huge reversal in the very near term. Remember that management are expecting to reach the NASDAQ minimum of $2 organically. That means no reverse stock splits, but it also means no dilution either, as I said a moment ago. Because dilution would make getting to $2 organically near impossible in the short term. So let's be clear. This is a 4x price increase that we are expecting. This is not a little 10% or a 20% gain. We are expecting to see triple-digit gains here in the very near-term future, making this one of the best penny stocks for 2022. So guys, what did you think of that video? If you've watched all the way through, then you are a true legend. If you could smash the like button, that would be greatly appreciated, and hit the subscribe button if you're new to the channel. Follow me on Twitter if you've not already done so, and I'll catch you in the next update.